Uh, Hello friends, today we are going to learn financial accounting. Semester 6 under financial accounting we have a number of modules and you know that we already studied the underwriting of shares and debentures. So today we are going to learn accounting for limited liability partnership. Limited liability partnership accounting that we are going to learn. Now friends, we have a exam this month and we have to finish our two modules, and for that purpose I will take these lectures and we will study a certain theoretical part and the practical part also. So I share this particular video for providing the introduction part in our financial accounting. So let us discuss about the accounting for limited liability partnership. Now, whenever we will talk about the partnership form, you already studied about the Partnership Act 1932. Under Partnership Act 1932, there the minimum two partners are required, and to start their business they will prepare the agreement. It is called partnership deed. As per the agreement and the deed, they will run their business. The partners bring the capital also and share, do the business as per their rights and duties mentioned in the partnership deed. Now, then after that, they whatever profit earn, they will distribute it among the partners as per their profit sharing ratio that we studied in the our previous years. Now we will talk about the limited liability partnership. Last lectures I provided certain notes in said publications, and do you have, and I already informed that you should write these notes in your notebook. I hope you already wrote. Okay, now I will share certain pages of the said publication. If you see that, whenever we will talk about the limited liability partnership form, and whenever we will discuss, we have to consider about the limited liability partnership. It is a globally recognized form of business organization which is brought in into being India by passing LLP Act 2008. Before that, we we had an act of 1932. Now this particular limited liability partnership form they introduced, and they passed one act in the year 2008. Now this LLP Act is 2008. LLP is a form of organization in which designated partners and manage the business as per the provision of the specified in the LLP agreement. The limited liability partnership, they prepare the agreement, and those designated partner, what do you mean by designated partner, that we will discuss later, but they will organize, they will manage as per the LLP agreement. In this form of organization, liability of the partners is limited. The liability of the partner is limited. It has a separate legal independent status distinct from the members. It means limited liability partnership firm and the partners both are different because they have a separate independent status. Now, what are the features of the limited liability partnership? So there are number of features are there. It is created as per the act under 2008. Hence, it is a legal entity. Registration. Registration is compulsory under the LLP Act 2008. So registration, without registration, we cannot do the business. Governs. It is governed by the provision of the LLP Act 2008 as well as LLP rule effective from 1st April 2022. It means it is run as per the Act 2008 and LLP rules. It's from 1st July 2022. Then LLP has a perpetual succession. The perpetual succession means what? It has a continuous life. It has a long and continuous life, stable life, constant life. Partners may may go LB continues its operation till law says no. It means the partnership form LLP has a separate entity. There is no question about whether the partners are coming or going, and they leaves the partnership form. They again new partners are appointed, but LLP has a continuous life. It means perpetual succession. LLP agreement. It has an agreement which is a chartered of LLP. It shows the scope of the operations and the rights and duties of the partners. LLP agreement is very important. Whenever we will talk about the agreement, so, what are the scopes of the business? What are the rights and duties of the partners? Also mentioned in the agreement. Liability, as you know, that the liability of the partner is limited to the extent of their contribution towards LLP. Members, minimum two partners are required to form LLP, and there is no limit on the maximum number of partners. Now, friends, in the Partnership Act 1932, minimum two partners are required, and maximum limit is 20 partners for banking business, and around 10 partners for non-banking business. So these are the things are mentioned in the previous act. Still we have this partnership act, but in this particular limited liability partnership act, minimum two partners are required and maximum no limit. Now, designated partner means what? There can be five designated partners without having DIN at the time of incorporation. Now, DIN means designated partners in a identification number, and this particular number, how many partner can become a designated partners? Five. Dissolution. It can be dissolved voluntarily by the order of NCLT. The NCLT provide the order, or sometime it is dissolved voluntary. Means all partners are not agreed to run their business, then they can dissolve. Transfer of interest. A partner can transfer his interest subject to provision of the LLP agreement. It means the interest, whatever is there in the partnership, it is based on the LLP agreement. Ownership evidence. Ownership of the partners in the firm is the evidence by LLP agreement. Whatever agreement provided, in that agreement they are provided the rules and regulation, how to run our partnership firm, and what kinds of provisions are there, what are the rules are there, what are the rights and duties of the partners, how we will do our business, what will be the scope of the business. These kinds of information is available in the agreement. Then one more feature is there. LLP has a own common seal. It depends on the terms of the agreement. The common seal generally means the it is a signature of the LLP, limited liability partnership form, is a legal entity. It is an artificial person. They cannot sign. Therefore, they have common seal. The common seal is the signature of the LLP. Then principal and agent relationship. Partner act as the agent of the LLP. This word is very important. Partner act as the agent, and there are not the agent of the other partners. They are not the agent of the other partners, but they are the agent of the LLP. Means they are the agent of the limited liability partnership firm, but they are not the agent of the other partners. Statutory records: LLP has to maintain books of accounts as per the required by the Act. The books of accounts they maintain. Now see that we have to study the how they will do the books of record, how they will maintain, what kinds of books of record maintain, that we will study. So LLP has to maintain, it's compulsory to the to maintain books of record as per the Act. Small LLP. Now amendment Act provide for the formation of the small LLP, where amendment is changes in the Act. The contribution from the partners is up to rupees 2.5 million. This limit may be increased up to rupees 50 millions if the partners contribute the amount around 2.5 million, and sometime it may be increased up to 50 millions. So the small LLP they can form. Their turnover for the preceding means before financial year is up to rupees 4 million. This limit may be increased up to rupees 500 million. The central government may have also notified the certain LLP as startup LLPs. So if you know that there are number of startups are going on, and some of the limited liability partnerships are also startups. According accounting standard for classes of the LLP, central government may consultations with the National Financial Reporting Authority, and they prescribe the standards of the accounting and auditing. These standards are shall be recommended by ICAI. ICAI means Institute of Chartered Accountant of India. They frame the accounting standards, and this particular accounting standard it is followed by every LLP. So now startup LLP, the concept of the startup LLP has recognized under the LLP Act to promote the business. So these are the certain features are there regarding the features of the LLP. Sometimes they may be asked the question, what are the features of the LLP? That time you have to write these particular features. Features may be creation, registration, governance, perpetual succession, LLP agreement, liability, membership, designated partners, dissolution, transfer of interest, ownership evidence, common sales, principal agent relationship, statutory records, and small LLP, and sometime accounting standards for classes of LLP. So I hope you understood these particular features that you should study, you should follow, because what happened in exam they may be asked the short note, write short note on features of the LLP. That time you can write. I hope you understood this. These are the certain features we will study further in our next video. Thank you.